Welcome to the EA Part 1 exam preparation series covering individual taxation for tax year 2025. This episode introduces the structure of Form 1040, filing statuses, and the fundamental concepts tested on the special enrollment examination. Understanding these basics is crucial as they form the foundation for all individual tax return preparation and representation. The exam will not ask you to fill out a tax form, but it demands that you understand its logic, starting with the concept of adjusted gross income, or AGI. Think of the tax formula in 3 steps. Gross income minus adjustments equals AGI. Then, AGI minus deductions equals taxable income. The exam's entire focus is on what qualifies for each of those steps. For example, a question might state a taxpayer has wages of $90,000 and paid $2,500 in student loan interest. It will ask for their AGI. You must know that student loan interest is an above-the-line deduction, an adjustment to income. So, you subtract it to arrive at an AGI of $87,500. A common trap is including a deduction that is not above the line, such as mortgage interest, which is an itemized deduction and does not impact the AGI calculation. Knowing where a deduction goes is more important than memorizing the form itself. This logic directly flows into the most tested foundational topic, filing status. The exam bypasses simple single or married filing jointly scenarios and focuses on the complex eligibility rules for head of household and qualifying widow or widower. For head of household, the exam will test you on the 3 required conditions: being unmarried, paying for more than half the cost of keeping up a home, and having a qualifying person live with you for more than half the year. Here is the classic exam trick. A divorced parent can often file as head of household even if the other parent claims the child as a dependent for tax credit purposes. Imagine a scenario where Maria is divorced and her son lived with her for the entire year. She paid all the household costs. Even if her divorce decree allows her ex-husband to claim the child for the child tax credit, Maria still meets the head of household requirements because the son is her qualifying child who lived in her home. The exam is testing your knowledge that the HOH qualification is separate from the dependency claim in this specific situation. Another difficult area is when the qualifying person is a parent. Your parent does not have to live with you, but you must pay more than half the cost of maintaining their main home for the entire year, which could include a room in a nursing home. The rules for qualifying widow or widower are just as critical. This status is available for 2 years following the year of a spouse's death. A test question will provide a timeline. For instance, if a client's spouse died in 2023, they can file as married filing jointly for 2023. If they have a dependent child, they can then file as a qualifying widow or widower for 2024 and 2025, but not for 2026. The most common trap is remarriage. If the surviving spouse remarries at any point during the year, they lose eligibility for this status for that year. To keep this straight, use this simple phrase: 2 years follow, but don't remarry tomorrow. This mental shortcut reminds you of the 2-year window after the year of death and the absolute prohibition on being remarried. The exam will present a scenario where a widow remarries on December 31st, and you must know she cannot use the qualifying widow status for that year.